What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market, we're getting a bounce from a critical support zone, and some very important breakthroughs are happening in the market. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. First things first, who knows who this handsome young gentleman is? I'll give you 3 seconds to figure it out. Yes, his name is Warren Buffett, and he's arguably one of the best investors around, and he consistently beats the S&P 500. Why am I telling you this? Because something very important just happened today, and it's going to be relevant to the entire market. So let's jump over to a chart of Berkshire Hathaway, and this is what you are buying if you are buying into Warren Buffett's investments. And the very important breakthrough today is that not only did we break out to an all-time high, but Berkshire Hathaway closed at a brand new all-time high, and this is more than likely another leading indicator of exactly where the S&P 500 is going. There's just no way in a bear market Berkshire Hathaway is breaking out to all-time highs, just like I told you with the industrial sector, the tech sector, and stocks like Caterpillar. This is obviously very bullish momentum, and you don't get these sort of breakouts to all-time highs if we're going back into a bear market. So I continue to warn you, if you still think the market is about to crash, or you still think there is an epic bear market right around the corner, you are playing against all of the odds of what we are seeing on the charts. So in the near term, it looks like SPY is about to break out to all-time highs in the coming future, and you could see very clearly Berkshire Hathaway had a double bottom and then a really nice bull flag breakout. And all year long, this has been on my radar, and if you're in the Discord server, you knew this was one of my leading indicators on how I knew we were likely going to have a very bullish year. Because this is a leading indicator, I was able to get ahead of the S&P 500, and now we're seeing the same exact thing happening with this breakout to all-time highs. So I'm warning you right now, if you still have a bear bias, and you still think we're going to crash, and you still think a bear market is on the horizon, you are playing against all odds, and that's completely fine. You can do whatever you want. But I'm just telling you, you're playing a very difficult game if you're betting against this bull trend. All right. So jumping back over to SPY, we can see we were up 0.87% today, and we did hold that support zone at 448. And I did a very detailed weekend analysis, and I told you we closed last week right on top of the weekly support trend line. So it's not surprising that we're starting out with a bounce. But in order for this bounce to continue this week, we really need to break through that 20 daily moving average and that resistance zone at 452. So this week should be fairly simple to trade. You're bullish above 448, more bullish above 452, and a little more risk off if we break below 448 because we have that gap to fill at 443. But pay attention to the Bollinger Bands because they're squeezing, and that gap to the downside is now outside the lower Bollinger Band. So as I always tell you with the market, you're playing odds and we're in a bull trend, so that automatically means the odds favor upside. And now that the lower gap is outside the lower Bollinger Band, the odds are that we actually fill the upper gap before we fill the lower gap, and the upper gap is above 455. So I will not be surprised in the slightest if SPY bounces from 448 and then goes all the way up to 455 and closes the gap. And with the breakout in Berkshire Hathaway to all-time highs, I wouldn't be surprised to see SPY continue higher, hit the price target at 460, and likely break through it and go higher. Again, we're playing odds, and you're managing risk right here at 448, and you play however you want, you can trade it however you want, and you can draw up your trade plan however you want. Those are the critical levels no matter how you're trading. That's where you need to manage your risk from. So pay attention to that critical support at 448, and understand if we continue to bounce, we're likely going to fill that gap at 455. And if we break support, we're likely going down to fill the gap at 443, although we will need those Bollinger Bands to expand to allow price to go a lot lower. On the NASDAQ 100 triple Qs, we were up 0.85% today, and again, we're bouncing from a critical support zone right around 372, and this is exactly where the bulls need to make a stand, and that's exactly what they did today. Just like SPY, the daily Bollinger Bands are starting to squeeze, so volatility is drying up, which means we're about to see a huge burst of volatility around the corner, and I do expect to see those bands expanding once more. And the odds are still a bull trend while the triple Qs are above 370, and below that we have a gap to fill just above 368, and the rising 50 EMA right around 366. So there's still a ton of support, just a few dollars apart to the lower side before we break through critical support. Now to the upside, we need to see the Qs breaking through 375, and then we'll likely go fill the gap above 380. And this is still very likely a bull flag until we break through critical support and start slicing down below the 50 EMA. So do not get overly bearish. Like I always say, you need price action to prove everything. and this is a bull trend until it's not. For all we know, this is just a breakout and a retest of the previous high, which is old resistance becomes new support before we go and continue higher. Do not rule it out. The XLK has already made all-time highs, and the triple Qs are looking very robust even with the Apple sell-off, which should tell you that relative strength means that we do not even need Apple to rally for the triple Qs to go higher. And that tells you a lot, and that's not something I would be ignoring, because at any point Apple can turn the corner and start heading higher, which is only going to add more fuel to the fire to the upside for the triple Qs. On the Dow Jones, we were up 1.13% today, and I have not moved this arrow one bit. This is the same arrow I drew last Thursday where I said we would likely come down to support and bounce and continue higher towards 360. And with today's impulsive buying and breaking through that resistance at 353, it looks like we're well on our way for this to play out. Doesn't guarantee it's going to be correct, but it looks like it's more and more likely now that price action is moving in favor of the prediction. So we have one more resistance to break at 356, and then we go to 360. And I did tell you if we broke above 353, I thought we would break above 356. So I'm not changing a thing about my prediction. That's still what I think is going to happen. It doesn't mean we can't come back down and retest 353 and then continue higher. And I do have that arrow reaching the price target by the middle of the month. So pay attention to this critical support, which is also a gap fill right around 350. And we need to break that support now at 353 to go any lower. On the Russell 2000 IWM ETF, we were up 0.07% today, so a relatively flat day, and we're sitting around these bunched up moving averages, so there is going to be strong resistance right around 195. But if we break through that resistance, we're likely going to start running higher as these Bollinger Bands expand and reach those higher targets in the 200s. I did a very detailed episode on the weekend going over weekly technical analysis, and the small caps were one of the focuses there, so if you haven't seen that video, I suggest you check it out, because there's going to be a lot of opportunity in the small caps if we do get a bull breakout. Manage risk right here at the support zone between 193 and the gap fill at 190. On the RK ETF, we were down 0.5% today, and we're right on top of the 50 EMA, retesting the bear market resistance, which is now going to be a test of support, and that is that support zone between 45 and 46. And so far, that level has not broken down, and we're sitting at the lower Bollinger Band. And my prediction is that we'll hold that retest and continue higher into the mid 50s. So manage your risk right at the retest at 45 or this support zone at 44.5. And if we break below that, yes, it's possible this was a false breakout and we're not yet out of the bear market. But if we bounce and see impulsive buying from here, the bear market is over and we're going to higher prices. On the VIX, we were down 7.72% today, and my prediction in the VIX is that we were going to get crushed back down towards this gap fill in the low 14s, and so far the VIX is getting crushed, and it was way outside that upper Bollinger Band. So far the predictions are playing out, but don't get complacent. You still need to manage your risk at the critical levels I give you. But it is good news that what we were expecting is playing out, and it makes things a little easier to predict if they continue along that path. On Bitcoin, we're currently trading right around 29,200, and we're coming back up towards the negatively sloping 20 simple moving average. And yes, this does still look like a bull flag because we're not getting any impulsive selling to the downside. So eventually, I do think we are going to break out of this trading range and start to run to higher prices. But the confirmation in the price action is going to be the break above 30,000 to 31,000. And then we can ride that bull all the way up to about 35 to 36,000. Critical support remains 28,000 while we're trading below resistance at 29,500. On Tesla stock, we were down 0.95% today, and intraday we hit the lower Bollinger Band and bounced back above to close above the rising 50 EMA, which is now starting to flatten out. So this is do or die for Tesla, because if we break that support and start to head lower, we're looking for the gap close at 235 and the critical support at 230. As long as we hold 230, I think that's a buying opportunity. And that's likely going to take us to much higher prices to finish the year, or we could bounce right here from the 50 EMA and start heading higher. So the bull breakout will be the confirmation of the close above 270 to 274, and then I think you can jump on that bull and ride it to the gap fill above 289 and higher prices. On Apple stock, we were down 1.73% today, and we broke down below the support at 182, and we closed right near the support at 179, and if we continue much lower, we're likely going to fill this gap right around 175.77. Now we're 2 days below the lower Bollinger Band, and this is an absolute behemoth of a stock, so there was likely some people in this stock that got caught off guards after earnings, and now they're needing to manage the risk and exit. But eventually Apple is going to turn this corner, and it's likely going to march all the way back up to right around 190. Now, I'm not saying when that's going to happen, because right now this still looks like a falling knife, and if you try to catch a falling knife, you're always likely going to get cut. However, eventually we'll see the selling pressure drying up, we'll see the price action turn the corner, and then you can take a much better low risk trade to higher prices, and you can manage your risk from wherever we bounce from. So if you want to trade Apple, you either need to be patient or you need to be a longer term swing trader that doesn't mind dollar cost averaging down. And these are all of the critical supports below, with the most likely target below 179 being this gap fill just below 176. If you want to get more bullish, I would wait for a break above 180, and that is more of an intraday sort of day trade idea. So jumping back over to the S&P 500, the market has not yet started crashing, which a lot of people are trying to predict, and a lot of people have been trying to call tops all year long, and they've continued to be proven wrong. And if you continue to get proven wrong and you continue to call for crashes, you just need to look up the definition of insanity. This is a bull trend until it's not, and price action needs to prove it's not. There's no reason trying to be a hero and trying to call a top. Nobody's going to be impressed, because by this point in time, even if you're right, you're just a broken clock, and eventually a broken clock is going to be right. So try not to be one of those broken clock bears. Tune in to what the chart is telling you, manage your risk from the critical levels, and you're just going to have a much better time trading this market when you're unbiased, you're staying objective, and you're managing risk at these critical levels. So you know the critical levels, you know what the price action needs to do. Make sure your trade plan is prepared for either scenario, and just sit back and relax and stay objective and try not to get overly emotional and try to block out all of the noise and just stick to your plan. If you want to come crush this market, consider joining Bank Trade Alerts or the Stocks Channel Discord server. You'll find out how to join either service by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.